Hi, this is Alberto Pau on a Tuesday afternoon here in cold and rainy London. I'd like to spend a few minutes outlining how William Gann made over $500 million trading Forex, stocks and other commodities using his analysis that he himself called Gann analysis. The basic assumptions of Gann analysis is that only price, time and range are the factors that matter. So you can see how this is invariably technical analysis, as none of the fundamental factors have an impact. These key elements are key. I'll repeat them. They are price, time and range. The second assumption is that financial markets, as a result of human behavior, are cyclical in nature. In other words, history is a good predictor for future. And three, that financial markets are geometric in their movements. That means that if you can spot a pattern or any other geometric shape in a chart, then it is likely to be repeated in the future. If we quote Gann, we could say that by studying the past we can predict the future. And this very simple theory made him more than $500 million. So what are Gann angles? They are special angles that you draw on a chart and that will give you a good indicator of what the price is going to do over the next X periods. So let's get started. All of Gann's techniques require equal time and price intervals. In other words, a rise of a 1 by 1 on a Cartesian chart would imply a 45-degree angle. This statement may sound a bit obscure now. We'll go through some examples shortly and you'll get a better understanding for this. All in all, Gann believed that when price and time move in sync, then that's the ideal balance for the market. Again, it may sound a bit abstract and theoretical at the moment. It will make a lot more sense when we go through charts. So what do? We have special Gann angles, and more specifically, Gann came up with 9 different angles. The most important angle is the 45-degree angle, or the 1 by 1 line. For every angle, there is a line that is derived from that angle. Other angles are, for example, 1 by 2, or 2 by 1, or 1 by 8, and so on and so forth. Each one of these angles will give a line. So, we take a chart and we pick the significant highs and lows. And we draw these 9 angles on that high or on that low. We'll go through a chart in a second. All in all, the big of the theory revolves around the fact that prices above the 1 by 1 line, the 45-degree line, will determine a bull market, and prices below the 1 by 1 line determine a bear market. If prices are above the 45-degree line, we're in a bull market. If they're below, we're in a bear market. So how do we interpret these Gann angles? We've had an overview before, and we start to understand how Gann angles provide support and resistance, depending on which way around the trend is. It's worth noting, and this is a continuation of the last statement in the previous slide, it's that once we are crossing the 1 by 1 line, so let's say we go from below to above the 1 by 1 line, then we are expecting a major trend reversal. So we're going from a bear into a bull market and vice versa. Okay, and then the next trend line becomes the next support resistance level. In other words, the next Gann trend line becomes the next support or resistance. And this takes us to Gann fans. Once again, if this sounds a bit theoretical still, stay with me. We'll go through a chart in a second and it will all make sense. Gann fans essentially display the lines at each one of the Gann angles. Let's look at this chart, for example. So here, let me see if I can get a marker. Perfect. So here we have identified a significant low in the market. And we have drawn the Gann fan. Okay? So as you can see here, there are 1, 2, 3, 4, 5, 6, 7, 8, and 9 Gann lines. We go from the most important, which is the 1 by 1, here. Let me see if I can highlight it. Perfect. This is the 1 by 1 line, 45-degree line. So essentially this is telling us here that we are in essentially this major support level, resistance level, and this major support level. This is a 2 by 1 line, 3 by 1, and so on and so forth until we get to the 8 by 1. And then we have an additional 4 lines here with obviously higher gradient. Each one of these is a Gann angle. Each one of these is a Gann trend line, if you want. And this is the Gann fan overall. Okay. It's key here to note how the 1 by 1 line is a major, in this case, resistance level. We can see it's been a good resistance here, good resistance here, okay resistance here, and how the 2 by 1 line is a good support level. You can see it's a good support here, it's a good support here, it's a good support here. Okay? This is in a nutshell Gann angles, Gann trend lines, and Gann fans. That's all there is to it. To summarize, trend and price are the same according to Gann. When they square out, i.e. they are perfectly in sync, a major trend reversal is imminent. Time is as important as price. What Gann was aiming to do is not just predict where the price is going to go, but also when is it going to get there. Okay, so the major period counts, days or weeks, are usually 30, 45, 60, 90, and 180 days or weeks according to Gann. Okay, so effectively, if we would have drawn a chart here with the time as well, we would have been drawing those period counts. Now we have yearly data here only, so we would have to get onto weekly or monthly granularity. So that's price. This is time, and then what also Gann was trying to determine is, well, how far is the price going to go up or down? In other words, I know the direction and I know when, but I also want to know how far. So these are what he calls resistance levels in both time and price. And these tend to be 25, 33, 55, 66, and 75% of the previous range. And you can extrapolate them to 100, 150, and 200% of the previous range. So effectively, he's saying, when you're looking to figure out when that actually is going to happen, look at these percentages in time in relation to the previous range, okay, So how long has it taken in the previous range? Well, look at these key numbers. And how far is it going to go? Well, look at these key numbers in relation to what it's done in the previous range. For example, if in the previous range the price dropped from 100 to 80, then you want to look at 25, 33 and so on so forth percent of that range. This is a summary of Gann theory. I hope you found this useful and educational. At the bottom of the web page there is a comments box. I strongly encourage you to leave any comments or questions you may have in that box. I would be reviewing them myself on a daily basis. If you have any questions, again, ask them there. There is also a Facebook like button. Please, if you've enjoyed this content, like it and show it to your friends so that they can enjoy the video as well. For those of you who are not on my newsletter yet and want to learn more about foreign exchange and how to fast track your profit from Forex trading, you can join it for free at www.myforextradingsuccess.com, or you can go directly to vip.myforextradingsuccess.com. That's vip.myforextradingsuccess.com. This is Alberto Pau here from London, UK, and I'll talk to you soon. Bye bye.